On this week's episode of Crowdfunding Nerds, we're joined by Khoa, who's an independent financial advisor. We talk about what crowdfunding is. We talk about the rule of 72, the mysterious magnificent 7 in terms of investing, cryptocurrency, and much more. Let's get into it.
Game begin.
Let's go.
You have my bow.
Am I ad?
That's awesome.
Hey, everybody, and welcome to another awesome episode of Crowdfunding Nerds. I am your host, Andrew Lowen, and I am joined, as always, by Sean and not Rick. In Rick's place, we have Khoa Hoang with, I was going to say one company, but I know it's not. What company is it, Khoa?
Now, an independent with Kingsview Partners, clearing through Charles Schwab.
Awesome. And so you are a financial advisor, and you help people invest in and save for retirement and that kind of thing. Welcome to the show.
Yeah, thanks, Andrew. Glad to be here. Again, I've known Andrew now for maybe 10, 12 years, something like that. And truly, I think a remarkable spirit. Love your energy, man. So thanks for having me on.
Thank you. Yeah. And I've been excited to chat with you about, so your expertise is in, stock market and investing and other things like that, which a lot of people will say, this is not exactly what I need to learn, because this is a marketing podcast and you should be talking about marketing. Well, what I really want to drill down into, the heart of this episode should be about having your ear to the ground. So to use an analogy, you put your ear to the ground to hear back in, cowboy days, you would have your ear to the ground because you would listen for horses or trains.
Yes, headed towards Isengard.
Yes, and you would know that they've quickened their pace if you knew what's going on with your ear to the ground. So I love that analogy so much better. And now, proverbially, we have our ear to the ground because we want to know, what is the market saying about, customer behavior or buying signals or patterns and that kind of thing. By just having an understanding of what signals the market, the stock market, and various other elements give us, we can just make better decisions, and so this one is really all about, I brought you on because you have expertise in this, and I'd really like to try to connect crowdfunding and and see where crowdfunding in the stock market can where we can learn things from you, and then where also they might be different, and what we can learn from that, and so but first, before we jump into that, Khoa, would you please share with our audience just a little bit about yourself and your expertise?
Absolutely, Andrew. And then if you could, please, I hear you refer to crowdfunding and Kickstarter frequently, and excuse my ignorance. If you could dumb it down just a touch for me here as well. Can you explain to me what crowdfunding Kickstarter is?
Yes. So, and by the way, for those listening, this is a question that you guys might actually receive from your family, your friends, and others that love you and want to support you. For example, I'm actually slated to give a presentation to my church about what it is that I'm doing with Deliverance, and that feels weird because a lot of my church is, we'll say, 50 and above, like 70 and above, where they might actually really want to help, but they may have problems like logging onto a computer or things like that. And so when we talk about crowdfunding, it's so easy because I'm this podcast, I'm talking about people, but when you talk to the everyday person, it's they might not actually know. So here's my attempt at explaining what it is. So if I have an idea, like a really great idea, and I go to I go to a bank and I ask for money to get that idea funded, there's a lot of not only proof, but we'll say, what is it, collateral that I will have to put up in order to get a loan, right? So if I need a loan of, let's say, $314,375, I'm going to have to go to the bank. Why so specific? I'll tell you why in a second. But I'm going to have to put my house on the line for that, right? Or I'm going to have to do something, maybe a loan shark that's going to, break my thumb if I don't pay back on time, like Rocky or whatever. Well, crowdfunding is me going to a website, Kickstarter.com or GameFound. There are others that I can go to this website. I can post my project and say, this is the idea that I have. Here are some, I don't have the physical project, but here's some 3D renders of what it will look like. And here are maybe some prototype pieces I printed out, and this is how it will play or whatever for like a board game. And you can raise $314,375 from people that say, I would like to, in essence, pre-order that from you. It will give you the ability to make it. You will not have a loan over your head, and your responsibility will be to do the absolute best you can to bring that project to life. That is the reason I said that number is because that is the exact amount I raised for this project here called Deliverance. $314,375 from 2,717 investors, in essence, that are like, I want to see this project exist, and I want the best version of it for myself. So so that's some of it. But then the other piece is they're smart. They're not just, it sounds like, if you think about it, in some ways sounds kind of like dumb money, but like the people that invested in a GameStop stock, right? But it's actually really smart. I mean, the GameStop people were really smart. But the idea is they know if you make your funding goal, so you have a minimum goal that you have to reach in order to actually, if I made $40,000, I could actually make this product. But if I didn't make that much, if I made 39 or 20,000 or whatever, there's no way that I can make the product that I want, so I won't get any money. But because I raised more than that, I raised more than 40,000, well above, 800% more, in fact. They, my audience, the people that are investing into this product, like $80 at a time or $90 at a time, for Deliverance, they expect that I will produce a better version because they know that, hey, you made $300,000. Each unit that you buy is going to cost much less than if you only made 40,000. You would do a very minimal print run of 500 units. But now I did a print run of 5,000 units. And with, manufacturing so many units of the game, you're able to make it for so much cheaper. So they expect you to add extra stuff. So add more cards, more characters, more, upgrade these coins to metal, give me awesome stuff that you really couldn't find on a Target shelf. So they want the best version of the game. So that's why Deliverance, you've seen it in person, right? You've seen others playing it. So you can see it's got like, plastic dudes, like plastic angels, and then you've got some metal coins and like a big neoprene. It's like almost like a giant mouse pad that you can play on, and that kind of thing. And that is because all of our fans wanted all of those things and were willing to invest, and that's how it came to be.
Man, for the investors, there's no equity interest. It's just a pre-order of the game. Wow.
Yeah, it's unbelievable. It's
So
really an incredible thing.
If you may, what are some of the other ideas that maybe you've invested through on crowdfunding? Like what kind of stuff could I see if I went?
There are a lot of different types of products. You can fund. So it's really all about bringing creative ideas to life. So if somebody has a great idea or an idea that they think is great, they can ask, or they can put it up on Kickstarter or whatever and ask for funding. So you see things like plays. You see people asking for, in essence, what amounts to a business loan. Like, I'd like to start a board game cafe in my city, of Toledo, or whatever, and I don't have the startup capital to do that, but they can actually get their community members to invest. It's like $100 to this guy. I can afford to pay $100, whatever. It's like, in a way, it's kind of like a political candidate requesting donations because you want to support them and their ideology, and see more of that happen in the political space. Well, that very much can happen in like a local community. So you can do, you've got like clothing. It's like the coolest belt in the world, or the fanciest, I don't know, jacket, or you've got like the coolest cooler. Just an idea for a cooler that keeps things cold and or hot or whatever, and it's some sort of like innovative thing. You can actually put that onto a crowdfunding, and then also board games. Board games are a huge thing. Video games and anything you can think about, apps and technology products and whatnot. Anything that you can think of that you want to make, you can bring it to life through crowdfunding. Now, the problem is that the market will often tell you if something is good or not, right? So if you think it's good, you have to bring a crowd of others that are like-minded, that also think it's good, that are willing to put their money where their mouth is and pay to bring it to life, or invest rather, right? Um so it's oftentimes not as easy as it sounds to get people to part with their money. Um, Board games in particular have seen like a huge resurgence through crowdfunding, because a lot of the when you think about products like things that you wear or buy, you buy them through traditional channels. You get them on now Amazon, or you get them through a a store that has a distributor that they buy from and all of that. Well, to get into distribution as a new creator, you have to have some huge buzz, which is why people go on things like Shark Tank to get investors, and hopefully they have 180,000 people watching, or a million people watching that end up buying on their website and things like that. So it's difficult to get into that space. But so crowdfunding kind of shortcuts around, it's like, instead of having to get somebody to invest all their money or a lot of their money and believe in a product, now you can get your audience, in essence, your end customer, to say, I would love this. And so that's kind of that's how I define crowdfunding.
Yeah. So fascinating to me, Andrew. And I don't know if you want to spend too much time here as well, but how do you get interest in your board game to a group of people that have no idea? I mean, without actually playing it, or I don't know, man. How do you generate that kind of interest to get
Yeah.
people to hand over even $20?
Right. It's very curious, because one of the main things, and this is really one of the lessons that I think transcends all types of marketing and advertising, is number one, when you think about like how they in the 50s, multi-level marketing was really big, and that was like the hottest way to market something. Um, they demonstrated the product, right? Everywhere you can think, TV commercials. I remember Crossfire, watching that board game Crossfire, like in the 90s. That looked so awesome and fun, because they made it look so interesting on commercials. While I was watching Nickelodeon, or whatever, a commercial would come on. It's like, oh, a toy that I need now, because it looked so fun. And really, what it is the experience. If you can demonstrate the experience that a person will have if they own this thing, they will be much more likely to actually desire that experience for themselves. So the key is demonstrating the product, is really what it is, demonstrating its use and its effect and the experience that one will have. So if you can, there are a lot of ways to try to communicate the experience. You can show, for example, the art. You can show, like, look at how great this art looks, look at how cool these components look, like look at the actual box or whatever. But then you can show, like, if it's a party game, you show people having fun with the game and being silly. But I always think, Billy Mays, the chief pitchman. There's always a story I think about, which is, I can't remember which product this was, but a guy accidentally invented like a type of foam that absorbs impact, like seriously absorbs impact, and he decided to make shoe inserts, and so he got into Billy Mays's show Pitchman. I believe it was what his show was before he passed away. He had a show called Pitchman, which kind of preceded Shark Tank. And the guy was like, I'd like to market and have you pitch these shoe inserts. And Billy Mays said, I'm not interested in that. It's just not something that I can sell. And the guy said, well, wait a second, hang on. I'd like to show you what it, an example of my product. And he said, okay. So the guy took a long strip of this foam. He put his hand on the table and folded the foam over. So the foam was underneath and over the top of his hand. And he took out a sledgehammer and he smashed his hand like 4 or 5 times. And then he took his hand up afterward. He's like, look, it's fine. It doesn't hurt. And Billy Mays
Oh,
immediately said, I can sell that.
oh,
So yeah. And so it's all about how can I demonstrate the effectiveness of this product? And, that's, you're not exactly, your feet aren't exactly like sledgehammers, into your insoles, but it gets the point across that, your knees and your hips are going to appreciate you after a while if you wear these insoles, so
yes.
that's how I find. Yeah.
Yeah, cool, man. Again, going back to the experience deal, I do have an MBA. I've been in the industry for 14 years. First 13 with one of the largest names in the industry, and went on my own about 8 months ago as an independent. Through all of my business studies, I'm completely unfamiliar with crowdfunding, but what a neat concept, man. And again, what a game changer for the lives of so many people, right? So neat deal. Neat
It's
deal.
huge. It's huge. I remember in my so when I went to so I run Next Level Web and Crowdfunding Nerds, which are really married as our organizations, but on the Next Level Web side, we do a lot of digital marketing, website and whatnot. But there was one client that was in our same office building, and I worked with them for like 3 years, and then they sold their company for $50 million. And they they just had kind of their little golden parachute. They retired. They were older guys that had super duper expertise in their industry. And I helped them with their website, and we were good friends. We'd see each other every day, just walking. I'd go to the restroom or something. I'd see them, because their office was right there. And so they sold this company and worth, 50 million bucks. And they were just super happy, but we were good friends. And so when Kickstarter hit, I'm like, man, I'm looking in the the middle of a Kickstarter campaign. It's like 30 days long. The first 2 days and the last 2 days are gangbusters, and the middle, it's like you're just trying to get any activity at all. You're really trying to hustle to get any, the one person to hear about it, please, and all. And so I actually thought, Gary is we're friends, and I helped him a lot, and I helped build his business, and he loves us. So I just called him. I was like, hey, would you be interested to support our crowdfunding venture that we've got going on right now? And he's like, what's crowdfunding? And so I kind of gave him a little bit of an explanation. He's like, yeah, I'd be happy to help you. And he actually told me before, when he sold his business, he's like, if you have any kind of business going on, anything that you need investment, you call me. I'm like, okay. So I was like, hey, Gary, I have a thing. You're not going to need to invest like crazy money, but if you'd be interested in investing anything, that would be awesome. And I kind of explained to him, you can invest at, you can like get a game, you can get like a little bit more than that. I have what I call the angel investor pledge tier, which is like $750. And Gary was like, dude, I'm in, and I'm going to go one of those big pledge tiers. And so he ended up getting a $750 pledge just because he was like, because he liked me, not because he played games or anything like that, but because he wanted to support. And there are many others like that you people listening to this may know that might not have a direct interest in the product or a direct interest in let's say crowdfunding, but have a direct interest in you, and that want to support you. And the crowdfunding event is a really excellent way. Like that's why, I'm in a BNI group with Khoa, a networking group where we talk about our businesses each week and get to know each other and whatnot. And that's something that I have kind of started to share with the group, and many of them might not be board gamers, but many of them will be very interested to support, for $5 or $20 or 100, or some of them, we have hardcore board gamers in there that love the game, that are all in no matter what I say. But yeah, so I think that's it's an interesting side, sort of tangential point.
What a neat deal. And then, Sean, just so I understand as well, which side are you on in terms of the business model? You also on the crowdfunding side or next level web?
Yeah, so I head up a lot of the advertising campaigns that we run as a company. So I would manage them and interface with clients and make sure everything is working above board.
Yeah. So our
Man,
latest is Avatar: The Last Airbender RPG. That's something that he's working on. So he does a lot of the crowdfunding nerds side of work, but
okay.
some it blends, right? If it involves paid advertising, then Sean is probably involved.
I tell you what, Andrew, I kind of like listening to Sean talk more than you.
He is
That
much
accent.
more sexy than me. He actually has this South African twang to his Irish accent, or would it be like an Irish twang to a South African accent? What would you say, Sean?
It's confused. I think that's what it is.
It's confused.
I don't fit anywhere.
Yeah.
But I suppose crowdfunding is quite similar to the stock market, right? Because it is a crowd of various people investing in a company, but I suppose the return that they're seeking is financial rather than an end product. And there's equity crowdfunding as well, which would be more of that line. But I suppose there's somewhat of a similar mentality between crowdfunding and the stock exchange.
Yeah, so let's talk about that. Like I maybe Khoa, if you wouldn't mind sharing, so you gave this presentation that really inspired me. It was like I was, eyes glued to my screen, ears just open and trying to absorb all the information I had. But you talk a lot about helping people save for retirement and invest properly and that kind of thing. Um, can you just give us, kind of flip the tables a little bit, and can you give us some of the basics of investing and why, and who is who should be thinking about this kind of thing, and let's just some of the basics, like we gave you about crowdfunding. Explain like I'm
Yeah.
five,
So I
like I'm
appreciate
10
that,
maybe.
Andrew, as well. We can take this several different directions, whichever way you'd like. So here are just some basic statistics, right? The S&P 500 has averaged over a 10%, 11.35% return over the course of the last 50 years. Okay. So in the industry, we have what's called the rule of 72. So if you take the number 72 and you divide it by your rate of return, it gives you the number of years it takes your money to double. Okay, so 72, you get a 10% return. Your money's doubling every 7.2 years. Okay, that's without lifting a finger. So the average Social Security income in the United States is less than 2,000. Right? So let's say, and I live in San Diego County, you're in Texas, somewhere as well, right? But here, if you are 65 and your only source of retirement income is Social Security, $2,000 a month. Oh, what is that? What does retirement look like for you? Right? So you better be doing something on the side to make sure you have something. And it could be a Kickstarter board game.
Yeah.
That could be your retirement plan. That's okay. Right? But a lot of people say, listen, you pay your church 10% every month. Don't forget to pay yourself 10% every month. Right? So just sock a little bit away. So during that presentation, we took a look at a 30-year-old that maxed out an IRA on an annual basis about $6,000 a year. You do that for 35 years, you put in 180,000, you'd have well over $1 million, right? 1.2 million by the time you're 65. That means the stock market with a compounding interest made you over $1 million without you lifting a finger. That's pretty powerful. Then again, right? The rule on the income side, you want to take somewhere between 2 and 5%. So 5% of $1 million, that's 50 grand. That's another $4,000 a month that you get to go have fun with your grandkids, or go travel to exotic islands, or go buy a bunch of board games through or support a bunch of people through crowdfunding, or whatever that looks like, right? But here, the key to the success is just getting started early, being consistent, a little bit at a time, and then investing the money properly. So that rule of 72, right? Let's say you are a good saver. And let's say you do save yourself, put away 10% a month for yourself. But instead of putting it in the market, let's average 10% return, put it in your bank. That's giving you 1%. So rule 72, 72 divided by 1. How many years is it going to take you to double your money in a savings account?
72. Yeah, mine gets
72
me
years, man.
0.01.
Right, 72 years. Yeah, we can't get to your retirement goals doing that, right? And then if inflation, historically 2.44, but more recently 7, 8, 9%, right? If inflation is 7, 8, 9%, but your money is making 1, yeah, you're safe, but you're safely losing money.
Yeah.
Right? You're losing purchasing power there. Again, just get started.
I feel like so right there, let's talk about inflation, because that's like a really hot topic. Very much, I'm sure, on the minds of those thinking about, going to crowdfunding, is like the effect that inflation is having on people. But there's something that happened, I want to say around the time of COVID, that it was like a currency exchange rate changed. So in particular, the dollar remained strong, but the British pound went from, and I'm just pulling numbers from memory, so I could be totally wrong about this, but it was like $1.65 to a British pound, to now it's like $1.30 to a British pound. And there were companies that held, like when you crowdfund, you go and you make a ton of money. I had $290,000 just dumped into my bank account, after the end of a Kickstarter campaign, after Kickstarter and the credit card company took their pound of flesh. It was like, holy cow, I am rich right now, except you're not really rich. You just have that money because you have to make the thing now. And so I thought, what should I do? Should I put it in Bitcoin? It's like Bitcoin is like 30,000 a coin at the time or something. And I'm like, well, what if Bitcoin just goes down and I just mess everyone up and I can't make the thing? So I just left it in the bank. It's like, I'm just going to leave it in the bank. I had to pay, various elements. It had to be kind of liquid because I had to pay my manufacturing bill and all that. So there were other times that the other companies rather, that did the exact same thing, and they just stored their money in pounds. And when it came time to manufacture in China, the British pound didn't, it lost, I'm going to say, what is that, $1.60 to $1.30. It lost like 15-20% of its value, and they weren't able to fulfill because they just the currency conversion dropped like significantly. So the currency exchange kind of ruined these people that kept their money in the bank. It almost reminds me of, like, in the Bible, it's got this parable of the talents, where one guy gets 5 talents and he goes and makes 10, and then another guy gets 2 talents and goes and makes 4, and then there's a guy that receives 1 talent, which is like a unit of money basically to invest in things, and he buries it.
There's about 2 million.
Yeah, so it loses its value because all he did was bury it. And that kind of sometimes feels like what I do or what others do. They just put it in the bank and don't do anything with it. And it's kind of scary what can happen to you if you just do nothing.
So here, Andrew, to that point, right? Why do people just put the money in the bank?
I would guess because they're scared to lose it, or.
Well, in Andrew, in your case, the money wasn't yours, right? There's only a portion of it. So it kind of has to stay in the bank, right? You can't really, risk investing someone else's money in that way.
Yeah, like if I had a way to guarantee that I could at least earn something without losing it, then it would be a different conversation. Like right now, Khoa, I'm 4 weeks from going to Kickstarter, and we could make $1 million, and that's going to sit in the bank. It's just going to sit there and make someone else money. So, like, yeah, go on, Khoa. I'm curious to hear your thoughts. Just.
But here, one, I think you hit the nail, right? 1, fear. 2, it's just a lack of knowledge in terms of what else is out there. So I think it can be intimidating, right? Going somewhere and just gathering information. You can't necessarily trust everything that you read on the internet either, right? So number 1, let's talk about that fear for a moment. And Sean, I get in Andrew's specific case a little bit different because not truly his money, right? The responsibility there, but I think there's some solutions there. But the fear, right? So here, let's talk about it. If the stock market has averaged over 10% return over the last 50 years, and your bank is paying 1%, right? Why wouldn't everybody put their money in the stock market? If wealthy people are doing it, right? Why wouldn't you want to do it? Because again, the flip side of that, sometimes markets can be down 20, 30%.
Yeah, it's like, what if Trump gets elected, or what if Kamala gets elected and the market crashes and we all lose our electricity and have to hunt deer with bow and arrow for food?
So here, listen, you only lose when you sell at the bottom. And 100% of the time, not 60% or 70% or 80%, 100% of the time, after a downturn, the market always reaches a new peak, right? So 100% of the time. So as long as you don't sell at the bottom, you're in good shape. The funny statistic is Vanguard did a kind of a white paper deal on this a number of years ago, maybe 6, 7 years ago, something like that. Markets average a 10% return, but the average investor, their average annual return over the same time frame has been 1.3%. Because again, people just get emotional. They buy and sell at the wrong time. I can't tell you how many times, right? People want to buy when everything's high, and then they just want to sell when everything is low, right? So that golden rule, you're supposed to be doing the opposite, you know it, but it's just the emotion that gets the best of you. So here, I think one, fear, understand long-term, 100% of the time, if you stay disciplined, you're going to do well. 2, educate yourself. So I can right now, Andrew, get you in investments that are guaranteeing a 4 to 5% rate of return, right? So they're insured, right? So here again, why stick it in the bank and let the bank make money when you can make money yourself, right? So I think that education piece, just talk to somebody that has some knowledge, command of the industry. That could be me, right? That can at least lay out some different options available to you. So
let's look at my situation in particular and apply it to others. Like I oftentimes I use Deliverance and my situation just because I can say whatever I want, and I don't want to be disclosing our clients' situations and all, right? But everybody can apply generally what it is that I'm dealing with to their situation in their own way. So let's say we go to Kickstarter, we fund the same exact amount as last time, 300,000, which is great. So I get, again, let's just say 300,000 deposited into the bank. I'm going to be responsible to eventually use that money to pay my manufacturer. So let's say I have 6 months before my manufacturer needs the first half of that payment, or let's say maybe I need to put the first half in right away to lock in my pricing, but then the other half is going to sit until it's finished manufacturing, which might be like 9 months. So I have 200,000 just sitting there in the bank for 9 months. But then I need to pull it out. Like let's say if I invested it all in the stock market and then in 9 months, the stock market tanks, I actually don't have the time to wait for it to come back up. So that's one area of fear, is that I'm on a timeline that I have to use the money. So if I lose, 30K, kind of rolling the dice in a way, it's more risky when I am like, oh, I only have 9 months. But then you mentioned like a guaranteed rate of return at 4 to 5%. Like, is it possible to, let's say, invest that 200K for 9 months and earn any kind of, guaranteed rate of return? And if the market was a downturn, I'd just earn 0% instead of losing? Or can you explain that?
yeah, sure. So I think oftentimes when people think or talk market, right, they're talking typically about the stock market, but stocks aren't the only investment in the industry. You can invest in money markets right now. Schwab's got one at over 5%. You have that are paying 6-month CDs that are paying about 4.5%, right? We have some short-term bond funds that are yielding 5.2%. So you can get in and out. And then in the industry, they have what are called Buffer ETFs. They're tied to an index. And, won't get into too much of it here, but and they use options to ensure these things, but they guarantee you can't lose. So, but you're capped on the upside, right? So if the market's up 5%, you get 5. If the market's up 10%, you get 10. If the market's up 15%, you get 10. If the market's up 20%, you get 10, right? So you're capped. So what do you give up for that cap? Well, on the downside, if the market's down 5, you get 0, but you're not down. If the market's down 10, you get 0, but you're not down, right? So you protect your downside, but what you're giving up is that upside, right?
Yeah.
Yeah. So here's lots of different options, and not just your case, right? So I have a business owner this past week sold a business, nice sum of money, but we know they got to pay taxes middle of April next year. So listen, Khoa, I got a bunch of money here, but I can't really take risk with it because I know I need it, but I'd like to make a little bit of money on it while it sits, right? So in your case, 200,000, we get 5%. It's 10 grand. So here again, 10 grand, probably not life-changing money, but with a tribe of kids.
That's a big deal.
Yeah, with a tribe of kids in your house, Andrew, I'm sure you could use an extra 10 grand, right? I can.
Like toilet paper for the year.
That's right.
Dude, I could get like the double ply Charmin stuff, like the mega rolls for that.
Yeah, right. So here, again, it's just even safely, we can get something like that for you. It's going to make a difference in your life.
That's amazing, actually. So one of the, I mean, I feel like I'm not the only person that thinks, how can that be true? I almost like, what I learned in it's a long time ago. I took the sales course. Actually, we had Dan Bow on with us and for a 2-episode special and selling stuff because he's so good at selling. But anyway, the first sales course I ever took was like, whenever you're selling something, you want to talk to the customer and address the conversation that's happening inside their head, not necessarily the one that they're speaking to you. So like if it's like, hey, you want to buy a website or you want to get crowdfunding services, they might say, well, let me think about it, or let me talk to my business partner. But what they're actually saying, or thinking in their head, and in this case, I think some maybe people are like, I don't believe what you're saying is true. Like, how could it be true that I could get a return for a short period of time with my crowdfunding dollars that is guaranteed not to lose money, but will definitely net me money? And I think that's, I am naturally one of those people, but I've never really played at the level of, a lot of crowdfunders are just, nerds living in their parents' basement that had a really great idea, or, some funny version of that, just regular people that suddenly hit big and now they've got a ton of money that they have to use to make a product, but it's going to sit there for a while. And it's the first time they've ever been in control of that much money before. So how easy is it to do this? And how do I know that your last name's not Madoff or anything like that, but like, how do I know that that it will be safe? You know what I mean? Like, back to the fear. Can you get, what was your response?
Listen, you can go to, and it's a great question, right? You can go to your bank, and your bank your local bank will likely have something over 4% right now, right? And that's FDIC insured for you up to 250,000 typically. Okay, so again, that's as safe as it gets, right? These Buffer ETFs, they're issued by reputable companies, giants in the industry. People have been using these for, right? And there's a trade-off. It's not, and we're also not guaranteeing or promising you the world. 5%, many people, right? The trade-off, many people think, 5% is not much, right? I got 500%, not 5%, 500% on GameStop a couple years ago, right? We're not looking at, I'm not promising you the world, right?
Mm-hmm.
But here it exists. The bank, how they make money, they take everyone's money, right?
Mm-hmm.
And they pay you as little as they can on it. And they don't keep your money in the bank. They're required to keep typically 10% reserves, right? The remaining 90% of your money goes to somebody else. They loan it to somebody else. They charge 5, 6, 7% on a home loan, right? 10, 11% on a HELOC right now, 30% on credit cards. That's how they make money. Here, right, on the investment side, we're not a bank. We're not making money on spreads, right? We make money making you money. We're trying to get your, right? We're trying to get your money to grow. That's what we do, right? So it's in everyone's best interest to get as much money as we can for Mr. Loan, right? That's the goal. So I would say here, in terms of the fear, one, do your due diligence. If you can find, if CDs are up to 250,000, FDIC insurance pretty safe. Money markets, again, 5%, that's pretty safe. Bonds, also pretty safe. Now, there's some volatility on the bond side, a little bit, right? And we can explain that. They're tied to, there's some factors there. So the bonds do have a market. They're not as volatile as, say, stocks, but those prices are going to fluctuate a little bit. They can fluctuate a little bit, right? But again, there's some safety features we can put there as well. But know that there are different options. Again, that education piece.
That's very cool. Sean, you've been pretty quiet. What you have any thoughts? Anything you want to get to?
Yeah, I suppose if you're not prepared to sort of seek out a professional who's willing to invest on your behalf, I think investing in what you know is probably the safest bet. And I think one way all business owners can do that, they can invest in their own businesses, right? If you have a certain amount of capital that you have, it doesn't necessarily have to stay in the bank. You can invest in developing another game. For example, if you run a game company, you can invest it in advertising. You can use it in a way that it is specific to your industry that maybe you have a bit more understanding of. So there's those types of investments as well. And that's probably where everyone could at least start, right? With, okay, I can allocate a certain amount of this into my business doing it this way. I always take this advice from my grandfather. He said, in terms of gambling, never gamble with what you're not prepared to lose. And I kind of feel that's the same with investments. So if you sort of have to have a certain amount of money that you're willing to lose, and then you can either give that to someone else to invest on your behalf, or you can kind of play around with that. But that's probably a safe way to do it, so to speak. It's not, if you lose the money, it's not going to make you homeless or something of that something that drastic. But I think that's probably the best way to. It always comes back to the sort of the parable of the turtle and the hare, right? It's sort of slow and steady wins the race. And I think that's sort of how you build wealth over time. It's just sort of being consistently, and it's little here, a little there, and over time you can look back and say, oh wow, look at all of this. But I think it's slow and steady rather than lots of money here, lots of money there, making big risky moves.
Yeah, I think to your point, Sean, if it's not the stock market, just have a plan and do something for yourself, right? Mm-hmm. So if it's whatever it is, just do something for yourself, right? I mean, again, you can't just rely on government funding, right? You need to take control, make it happen. Listen, the general fund on the Social Security side's in trouble. Right now, it's fully funded through the year 2034. And if they don't do anything here in the U.S. To that end, in 2034, 74 cents on the dollar ish, right? Now, there's, again, some legislation to extend it out, but 2034 is not that far away. So, right, Andrew, your mom and dad might be okay. We're not. Our kids are in some real trouble, right? Yeah. So whatever it is, 10%. If it's going back into your business, if you're hiding it under the mattress, if you're putting it in Andrew's dad's gun safe, whatever it is, right? Do something. Now, again, in terms of the fear, if it is long-term, and if you know the stock market historically has returned over a 10% return, why not? just don't sell at the bottom when it's down. In fact, next time it's down, put as much as you can in. And then here, maybe the other place in terms of where to focus. So the S&P 500 is one of the indexes that we follow. And the S&P 500, it's 500, and it's actually just a touch over 500, but 500 largest companies in the country. So the top 7 companies in the S&P 500, they refer to as the Magnificent 7 in the industry. Those 7 companies are responsible for roughly 35% of the overall capitalization of the 500, which means the bottom 493, maybe not as important. So if you are kind of going to do it yourself, maybe take a look at that top end and focus on the top end. That's what's truly driving the performance, right? This year, last year, and these are all kind of household names at this point. I'm not, it's NVIDIA, Amazon, Apple, right?
Yeah.
I mean, are they going to become insolvent? Probably not, right? Probably not. You can go anywhere in the world, Sean. You're probably on an Apple phone right now, right? Anywhere in the world, right?
Yeah.
Are they going out of business? Probably not. And with the world shifting and becoming smaller and closer, and this, we believe, again, this AI stuff going on right now, we don't think it's going anywhere. We think probably going to be a disruptor, much like the internet in the 2000s. We didn't understand how the internet was going to change the way we live. Right now, we think AI is going to change the way the world operates. We don't know how, right? But it's going to change, and it's not going anywhere, right? So maybe focus on some of the technology companies at the top end of the market.
Yeah, and there are 2 points. One is like, so I played poker semi-professionally, and I kept track of a bankroll and that kind of thing. I did a lot of online poker, and I thought the exact same thing. So the bankroll was, I started with $100, and I played at small tables online, like 25-cent, big blinds, if those that are listening are familiar with poker. And eventually built that bankroll up to about $500 and started playing at tables that had a little bit of a larger limit. And then I made up $1,000 and decided I beat the game, because it was either I need to play like for real, or I need to decide that I'm okay here. I made a little bit of money. It was fun and all of that, but I'm not willing to take the next step. I had a friend of mine, plays on the World Series of Poker tour every year, won a bracelet in the World Series of Poker. And he's like made the final table every single year for the last like 4 years in the World Series of Poker. Very skilled. I'm just like, I didn't want to take it that far. Right. So I decided I was done. And that was a very, very important rule. Like if I could play like a robot, I would consistently win. I might lose a hand here and there because of the odds were, like I had pocket aces and I went all in before anybody saw any cards. And then, it turns out the guy got something, when the flop hit or whatever. But overall you would win. And one of the most important principles was you can't sit down with money that you're not willing to lose. So if you go all in with pocket aces and you lose and you put your house on the line, that was too much of a risk, right? But if you put $150 on the line and you go all in with pocket aces, you're going to win more than you lose. So if the amount you lose is acceptable, the amount you win is going to be greater than generally, by playing well, the amount you win is going to be greater than the amount you lose. And that's how people sustain their poker careers and whatnot. So for me, I think not sitting down at the table with what you're not willing to lose, that's a very important principle. But what you're saying, Khoa, is like, I can sit down at, let's say, your table, like, and invest with you and say, Khoa, I'm not willing to lose this money. I have $100,000 that I want to put away for like 9 months. I'm not willing to lose it. What options do I have? And you say that there are options that I can earn 5% and potentially earn up to 10%, but then not lose, right?
100%. I correct as well. And again, that's for the shorter term money. Again, for the longer term, let me give you a couple of examples. I think the principle that you two talk about, right? Only money that you can afford, and I don't see what I do as gambling at all. Because again, you will only lose when you sell at the bottom. But I have a client that is 62 and kind of special needs, and works at a grocery store, because grocery stores get some additional compensation for hiring, right, some special needs guys. And around town here, I see him frequently digging through trash cans and collecting cans. You would think that maybe homeless, right? He's been putting just a little bit aside every month. Doesn't make much. Been putting a little bit aside every month. He's got $700,000 with me, right? I started a simple plan for a company, one of my first, about 14 years ago. And a Hispanic fella, a little bit older, was going to retire in 15 years. Very distrustful of the market, fear-based, never done anything before. Just put a little bit in. And at first, all we did was kind of that money market thing, or the super conservative stuff, right? I can't lose, right? Over time, he started to understand investing a little bit, particularly with the longer term perspective. He just retired, and again, kind of a labor job, but just retired with an additional $150,000 for he and his family. He took that money, built a home in Rosarito as well. It's way cheaper to buy there as well. But again, life changing, just putting a little bit away, recheck. Now, much different life than he would have had his business owner not put in place a simple IRA plan. So just a couple examples.
I know that some of this can also be automated, because I've done a little bit in terms of buying currencies, and you can set up spot trades, right? So if you're willing to be patient, you can wait until a certain threshold is reached, and it'll automatically, make a trade or make a sale. So you can sort of set these up and just let it sit there, and then come back maybe a couple of months later and be like, oh yeah, it sold or it didn't sell. So I do know that some of it can be automated in terms of selling stocks or selling currencies.
Yeah. So you can set specific strike prices for yourself as well. But here, I truly, even for myself, right? And I've been in the industry, and I think I'm very good at what I do. I'm certainly not the smartest person on the planet, but here, truthfully, right? I don't know that somebody in their right now, one of the biggest rates, you mentioned it earlier, Andrew, cryptocurrencies, right? So Bitcoin, man, should I take this? Bitcoin's at 30,000, right? I mean, again, because it's all you hear, right? So there's this massive kind of craze about the deal. Here, to us, to me anyway, no kind of silver bullet. To me, you're telling me now that it's a currency. You're telling me now that some 22-year-old kid in his basement is all of a sudden a currency trading expert. Right? I don't know that anybody has the time and expertise to do those kind of deals, right? For the cryptocurrency. So in 2022, just a couple of years ago, we had a bear market. Bear market's defined as a 20% drop from the peak to the trough. So I wasn't immune, right? My clients that were in the stock market, we were down as well. We weren't very happy about it. It doesn't feel good when you're down 20%. The cryptocurrency side, many people were down 70%, 80%, 100%, 100, and not getting anything back ever, right? So here, again, just on that side, just be cautious, right? And then again, lots of, and you can Google these, lots of fraud kind of on that side, very difficult to kind of protect on that side as well. So just, again, maybe out of your bankroll. And Andrew, you're probably playing, I don't know, 2 to 5% of your bankroll for the tables on a nightly basis, something like that, right? We would say of your bankroll, maybe 10% on that cryptocurrency side. You want to protect, be a little safer on that side.
Yeah, that's like the volatile stuff. And when one of the things that I thought about, so one thing that really helped me, so school did not help me at all learn how to control my finances. And that's, I think, one of the the tragedies of the education I received. I have a bachelor's degree. I've taken extra finance classes specifically to know how to, balance a checkbook, and no, I learned about compound interest. I learned about all sorts of things like that. But it's something that, like, the basics of just, I learned more about the basics of how to be a good steward of money on Reddit than anything else, and from my parents too. But there's this, I want to say, like, a personal finance subreddit that's really, really useful, that will teach you how to do things like, put a budget for yourself together, like a spreadsheet that you can get that goes over all your monthly expenses and that kind of thing. We have, like, I just found out I've been paying for Paramount Plus for, the last like 9 months, and I had no idea. It's like, dude, that was like $11 a month that I've been spending and I didn't realize it. And, but if I had a better track of my budget, then I could stop the bleeding. It's like, I didn't realize that we were spending that. I'd rather have $70, Um, then the one other element was the emergency fund. It's like the most important thing. Have an emergency fund in case your tire blows out or your air conditioning goes out in the summer or whatever. But then, so any thoughts on that?
Yeah, not in case. For sure, something's going to happen. For sure, something's going to happen with an emergency fund. So we recommend somewhere between 3 and 9 months. And so you're exactly right, Andrew. Establish that emergency fund. But then here, it is truly very simple. I think most people don't have a budget, and most people I talk to don't have a budget. So here, if you're not going to, and I think it's a good idea to put one together for yourself, truly. But here, it's very simple. To get ahead, to have multi-millions, one, live below your means. Very simple. So if you're willing at the beginning of the month to save 10% for yourself and spend the rest of your money, even without a budget, no problem. That 10% is going to you, right? So here, save a little bit, live below your means. Don't overspend on a monthly basis. And then just be consistent, do it month to month to month. You'll see pretty quickly, invested properly, or even just sitting in the bank, it's going to grow. It's going to grow pretty significantly, pretty quickly.
When it comes to cryptocurrencies, I would say the word you want to focus there is currency. I think people think it's crypto stock, and it is. They can play games with it. There's a great book by a gentleman called Roger Ver called Hijacking Bitcoin. There's a deep dive into why Bitcoin is not a great investment tool. In fact, when people kind of realize what it is, they'll realize how bad it is as an investment, and it sort of will inevitably lose its value over time. So I would be very cautious of investing in cryptocurrencies for the sake of trying to get a return. I think that technology is more useful as a currency and used in everyday transactions. I think that's really what those things are valuable for.
Yeah.
So I would stay away from anyone sort of offering investment advice when it comes to cryptocurrencies.
Yeah, so we agree with you, Sean, right? Blockchain, incredible technology. I think super useful. But here, you think about what people like about cryptocurrencies. It's untrackable, it's untraceable, largely untaxable, right? What industries need a currency that's untrackable, untraceable?
Terrorism and drugs.
Is that the sandbox you want to play in? Right?
Well, Bitcoin
I don't know.
actually,
And here,
I think there's some misconceptions. It is trackable. It is traceable. The ledger is open and known. That's actually one of the vulnerabilities of it, because it's hard to have fungibility, because there's known as virgin Bitcoin, freshly minted or freshly mined Bitcoin, which actually sell at a higher rate than sort of that dirty kind of, shoddy Bitcoin that's been used in black markets. It's a real danger of moving your Bitcoin around, where you could be booted off exchanges if you are being connected with Bitcoin and that's been connected with illegal activity.
yeah, yeah. So here, in just a personal experience, I've met a handful of people that have made some truly pretty good money through the cryptocurrencies, right? And end up building pools, I don't know, funding, whatever, truly, right? But that's probably 1 in 10. Most people that I've met that have tried investing in cryptocurrencies have lost. Most, right? So again, and then I've had people scammed, right, and lost their entire kind of accounts. There's no recourse, right? The police can't do anything, right? You can't. There's no governing body. There's no recourse for losing all your stuff, right? So I don't know. Again, just cautious. Just cautious. You want to do it, go for it, but be cautious.
It seems like, Sean, what you're doing is you're kind of de-risking the cryptocurrency by mining it and then using it for transactions rather than using it as an investment tool. I see cryptocurrency, it can be a volatile investment, very volatile. If you're exchanging dollars or exchanging whatever currency for Bitcoin or for Litecoin or whatever, then that for the purpose of saving it and seeing Bitcoin hit 100,000 a coin to then sell it, that's I think very risky. And for me, actually, there was a point at which I sold my house, when I used to live in Southern California and we moved to Texas, and I had a bunch of money in my bank account that was going to stay there for a while, but was for the down payment of a house because I sold my home. And my family of 8 at the time, 9 now, was homeless. It was like, okay, but I could put it all in Bitcoin. And this is a lot of money to drop into Bitcoin, but then what if it goes up? Like I could make a lot of money, and actually it did go up. It went up by like $20,000 or something a Bitcoin. And but the trade-off, like the opportunity cost of what if it goes down? Then we stay homeless. Then we live out of our cars. We have tons of issues. We'll end up with a smaller house, and that opportunity cost. Looking at, I could invest and I could make money like gambling, but the potential for loss was too great, and I wasn't willing to pay it. And I think that's something really important people need to think about. Like with crowdfunding, you have to deliver. The most important thing in crowdfunding, I find, for a long term, is your reputation. So you can't fix that when you do one project and you fall on your face, can't deliver it. Why would people invest in you again? It's like I'm throwing money away. And that's we've seen that with other companies that have taken, sometimes like one company took like $4 million to make this one a game, and you'd figure with $4 million you could at least make the thing you promised and whatnot. But at that point, there's so many other factors that they ended up scaling up their company to like 30 employees and burning through their money too fast and unable to pay for the big manufacturing cost or the big shipping cost, and they ended up going bust. And it was a big story. And this Mythic Games, for those that don't know, but and Darkest Dungeon was the game I was talking about. But it feels like the reputation, you have to deliver. So risk is not something that usually most of our clients are they're willing to risk money to get things funded. So I'm willing to put in, let's say, $5,000, $10,000 or whatever before we launch to build the crowd and invest into the right things, because that I call sunk cost, where you're like, I have to invest this. I have to invest this in order to even play. In order to even step up to bat, I have to invest some money. And that you've got to do it. But then afterward, when you have the money, it's like, that people become very risk averse when they have this nest egg that they need to invest. And I really like how there are options, and there are options that are very basically de-risked. How can people get in touch with you if they want to ask questions or potentially invest with you? Do you have requirements to work with someone that if somebody is coming and asking that may have money for a short term, or any so I guess your information, so someone can contact you, as well as what requirements you would have to work with someone.
Yeah, so minimum investments for me, 250,000 investable assets. Email, reach out to, it's my first initial K, last name Hoang @kingsview.com. kingsview.com, kingsview.com. Also, call the office at any point, 760-688-0200. So still in Southern California, still enjoying it over here, Andrew. Again, if I had 9 kids, I wouldn't be living here.
Yeah, my 0.1 acres over there was a far cry less than the 5 acres I have now. It's crazy, man.
So you're so I'm curious, what project on crowdfunding are you most excited about? Both of you.
Oh, you go first, Sean. Do you have an
Well,
opinion?
I suppose the Deliverance expansion, because that's the one I'm kind of closest to, which is launching on the 24th of September, is obviously one that we're involved in. So that is probably the ones on the forefront of my mind.
The projects that I tend to get most excited about are the things that I see, like when you want to give somebody a really good gift and you're like, what should I get this person? But then when you see something, you're like, that person would really love the thing that I'm looking at right now. That's when I get really excited. So like right now, there's this Brandon Sanderson, what's called the Cosmere RPG. It's Brandon Sanderson is kind of like the modern day J.R.R. Tolkien. Like he created a book series that became very, very popular, and that book series has been turned into a role playing game. And I'm not like a huge role playing game player, but one of the guys on our team internally and in Crowdfunding Nerds is Donnie. And I went all in on that thing. It was like $400 to go all in and get all the things, but it was such a cool opportunity to show, to just bless someone with something they may not have been willing to go all in. Because, we appreciate Donnie, appreciate, how he works, with the team, and it's just a way to show appreciation. And every once in a while, something like that will come out. It's like, dude, I've got to get this thing for that person. It's going to be it's like a gift to that future, just to the relationship, that I have with that person. And so that's about half the projects I back on crowdfunding are because of that, where my game shelves are too full. And especially, I back client projects all the time and that kind of thing. I just get a lot of games in, and it's like, I can't keep them all, got to rotate them. So that's one that I'm really excited about.
That's cool, man. That's quite a statement. The new J.R. Tolkien, right? That's quite a statement. Yeah, cool, man. And listen, just as a quick plug for Deliverance as well, I personally haven't played it yet. I'm actually not a big board game guy, but I've seen people play it, and again, just the emotional kind of connection they have with the game while they're playing is pretty remarkable. I mean, people are, there is the rest of the world doesn't exist when they're playing the game. It's they're that kind of engrossed in the experience. So it's a neat deal. It's cool. It's super cool to watch.
That's awesome. Thank you. I appreciate that so much. Well, man, let's wrap this thing up. Any final shots from you, or final thoughts from you, Sean?
Yeah, maybe a little bit off topic. I don't know if we've spent too much time in it, but have you guys ever heard of the Brie X scandal that happened around the 1990s? So a lot of people think that, gold is a good investment. It's kind of stable. It's got long-term value. But even that can have its risks. And an example of this would be the Brie X scandal that happened during the 1990s, where a charlatan was basically claiming to be a gold geologist or specialist who found a big reserve in Indonesia. And through a lot of hard work and trickery, was able to fool a lot of people. And a lot of people lost a lot of money through that scandal. It's one of the biggest gold scandals in world history. So it's worth looking into. It's quite a rabbit trail. But he eventually sort of like feigned his death by, falling out of a helicopter. No one found his body. He disappeared, and he's probably living somewhere on a private island. So it's quite a crazy story. But it's just maybe a fun way to kind of end. Just I think every industry has its ability to have dangers. So reaching out to professionals is going to be key.
Very good. Trusted professionals. And I can say,
Yeah.
with the reason that I wanted to bring Khoa on, the reason I wanted to bring you on is because I trust you, and I trust you very much because I've seen you make money for many people that I know, and they trust you. And so it's been great to just have this relationship with somebody that I can actually say that I personally can vouch for this person in this industry. So I didn't really want to bring any financial advisor on, because of course they'll say financial, investments are great, hire me. So I really appreciate you for coming on, Khoa. Thank you for edifying the group and all of our listeners.
Yeah, super, super fun, Andrew. Blessed to be here as well, man, and truly blessed to know you as well. I mean, again, I'm gonna have to tune into the other podcast. What a neat deal! This is the first one I've been associated with. Not much of a podcast guy, so super neat deal. But appreciate just an opportunity to hang with you for an hour as well.
You got it. All right. Well, then we're gonna have Robot Richard send us on out.
Well, that's all the time we have for this week's episode of Crowdfunding Nerds. For more resources, articles, and to listen to past podcasts, please visit us at crowdfundingnerds.com. And if you have a crowdfunding question, we also have a page on our site where you can send a message directly to us. Please visit crowdfundingnerds.com/question. And if your question is a great question, we may include it in a future podcast. Thank you all again for listening to this week's episode, and we'll see you next week. Stay nerdy.